Hello and welcome again to this particular session. So after having finished 7.2, I think in the last session we did that particular question with respect to net payment method, if you remember. And while finishing up the session, I also told about that when I would meet you in the upcoming one, we shall be discussing a very, very long question. Of course, this question too has been taken from your module, and this question has also struck up in the past attempts, and so it is quite vital question. Pretty long question, no doubt about it. So just have a look over 7.3. This is the one which we are taking up to begin the session. Z Limited took over the business of X Limited and Y Limited. The summarized balance sheet of Z Limited, X Limited and Y Limited as on 31st of March is given to you. Now pay attention down over here. Z Limited is taking over the business of X and Y Limited this time, correct? And you have been given the balance sheet is summarized form of all the three companies. Z Limited is the acquirer company, and X Limited and Y Limited both are acquiring company because Z Limited is taking over these two companies. As far as share capital is concerned, under the share capital we have got equity shares of rupees 100 each in it, and total share capital of Z Limited is 1,000. Figures are in lakhs. Don't let it skip out of your memory. Then 800 is the equity share capital of X Limited, and Y Limited is 750. Then besides that, we have 12% preference shares. Z Limited is not having any preference share, but X Limited and Y Limited are having preference share to the extent of 3 lakh, you may say, or 2 lakh, because figures are in lakhs. Correct? Similarly, now, as far as reserves and surplus are concerned, there are items like revaluation reserve. Once again, Z Limited is not having any revaluation reserve, but X Limited is having, and Y Limited too. Besides the revaluation reserve, general reserve is also there. These are the three items of reserve and surplus, correct? Revaluation reserve, general reserve, and profit or loss account. As far as general reserve is concerned, Z Limited is also having 600 or 6 lakh worth. Similarly, X and Y Limited are also having general reserve. As far as profit and loss account is concerned, Z Limited is not having any what we call profit and loss account balance. However, X and Y Limited, both these companies are having. And then we have in this case non-current liability. Non-current liability, correct? As far as non-current liabilities are concerned, there are debentures. Once again, Z Limited is not having single debenture, but X Limited and Y Limited both are having to the extent of 60 and 30. Then we have current liability in this question to the extent of in the form of sundry creditors and bills payable. So this is the situation as far as liability side is concerned. Now we move over to the asset sides. First item, of course, over there is non-current asset. Even under the non-current asset, we are given tangible assets first. Under the tangible assets, we have land and building and plant and machinery of all these three companies. Then we have investment. However, investment is of only X and Y Limited. Then we have in this case current asset in the form of stock, debtors, bills receivable, cash and bank. Z Limited is not having any bills receivable. This is the situation in this particular question. It's a pretty long question, I just told you. 10% debenture holders of X and Y Limited are discharged by Z Limited, issuing such number of its 15% debentures of 100 each so as to maintain the same amount of interest. Now in this question, very first line is quite important. Obviously, Z Limited is taking over X and Y Limited both. So quite obviously, it means that Z Limited will take over their all assets and liabilities. So once all assets and liabilities have been taken over, Z Limited, the acquirer company, decided that 10% debentures of X and Y Limited will be paid off, and will be paid off or discharged by issuing such number of 15% debentures of 100 each so as to maintain the same amount of interest. The very first line is quite important in this particular question. In order to make you understand this question, I may not use rough what we call fair sheets at all, just to make you understand better. So just pay attention over here. Correct? 7.3 is the question. In order to make you understand better, first I write here X Limited and then I write Y Limited. Correct? X Limited and Y Limited. We have seen that 10% debentures of X Limited in this question. 10% debentures are 60 and 30, which means actually 60,000, 60 lakhs actually, because figures are in lakhs in fact. 60 lakhs. 60 lakhs and 30 lakhs. 60 lakhs and 30 lakhs. Debentures are worth rupees 60 lakhs and 30 lakhs. In this particular question, let me pick up my other pen. This pen is not functioning quite well. So 60 lakh worth of debentures are of X Limited and Y Limited is having 30 lakh worth of debentures, correct? And one debenture is of 100 each. One debenture is of 100 each. But before that, let me also compute interest. Suppose you are the debenture holders in X Limited. It means you have invested in 10% debentures of X Limited. And similarly, if you are debenture holders of Y Limited, you have invested in debentures of Y Limited. Since X and Y Limited, both the companies in this case have debentures and their coupon rate is 10%. That means whatever debentures they have issued, they must be paying interest at the rate of 10%. So total interest on 60 lakhs at the rate of 10% must be equal to 6 lakhs. And total interest on 30 lakh worth of debenture at the rate of 10% must be equal to 3 lakh. Now go through the question. 10% debenture holders of X and Y Limited are discharged by Z Limited, issuing such number of 15% debentures of 100 each so as to maintain the same amount of interest. That means Z Limited has decided that after taking over, of course, the debentures of X and Y Limited, we will discharge this debenture. And for the same, we are going to issue 15% our debenture, 15% debenture, but we will issue the 15% debenture in such a manner that interest payment remains the same so as to maintain the same amount of interest. What does it mean? So 15% debentures will be issued. 15% debentures shall be issued to maintain same interest. That means you have to discharge the amount of the debentures in such a manner that, because now you are offering 15% debentures, in such a manner that interest payment still remains the same. So how we can compute that? See here, we know when rate of interest is 10% and amount of debenture is 60 lakhs, I'm talking about X Limited, 60 lakhs, then interest is actually equal to 6 lakhs. When rate of interest is 10% and amount of debenture is 60 lakhs, debenture holders are getting interest of 6 lakhs, correct? Now, in order to discharge these 60 lakh worth of debentures, we are offering 15% debentures. Now, question is, how much or how many worth of debentures now I should offer so that interest amount still remains 6 lakhs. So now you can find out this figure, and it will be equal to, this figure will be equal to 6 lakhs into 100 divided by 15, and that will be equal to 40 lakh. So now you have computed that Z Limited will have to issue 15% 40 lakh rupees worth of debenture. If you will compute 15% of 40 lakh, the interest payment will still be 6 lakh. So now we have computed that we are offering 40 lakh worth of debentures to discharge these debentures. That means we are offering 40 lakh worth of debentures, correct, to X Limited against 60 lakh worth of debenture. But debentures earlier were 10%, now we are giving 15% debentures. Similarly, we can compute with respect to Y Limited. As far as Y Limited is concerned, 10% debentures of Y Limited is equal to 30 lakhs and their total interest is equal to 3 lakh. That means total interest is 3 lakh at the rate of 10% on 30 lakh worth of debenture. Now we are discharging these debenture. We are offering 15% debenture. We are offering debenture with a coupon rate of 15%. So what will be the amount of debenture so that interest payment still remains 3 lakh? So similarly we can compute this one also. In order to find out the figure of question mark, all I need to do is to multiply 3 lakh with 100 and divide it by 15. Divided by 15. So I will be able to get the figure that will be equal to 15 to, I think it will be equal to 20 lakhs. So that means 15% debenture worth 20 lakh will have to be issued by Z Limited to discharge the debentures of Y Limited. Now you can compute 15%. In fact, you can actually verify 15% of 20 lakh comes to 3 lakh. So we have found out that in order to discharge the debentures of X Limited and Y Limited, Z Limited will issue or shall have to issue 15% debentures worth 40 lakh to the debenture holders of X Limited and worth rupees 20 lakh to the debenture holders of Y Limited. So this was the first point. The first point itself was quite tricky. Correct? This is sheet number 1 of this question. Secondly, now the next point is, this was the first point, and second point is with respect to preference share. Now pay attention. Preference share. Pretty long question, I have already told you, and pretty tough question also. Preference shareholders of the two companies are issued equivalent number of 15% preference shares of Jet Limited at a price of 150 per share and face value of rupees 100 each. Now if I look into the balance sheet once again, over there I find that 12% preference shares are there of X Limited and their face value of course is 100. 300 lakhs worth of preference share. 300 figures are in lakhs, so 300 lakhs worth of preference share capital is of X Limited and 200 lakhs worth of preference share capital is of Y Limited. Correct? Now the question states below, preference shareholders of the two companies are issued equivalent number of 15% preference shares of Jet Limited at a price of 150 per share and face value is 100. So just pay attention here. In order to understand this particular point, I take the another sheet. This is sheet number 2. Just wait. I've already told you in Visualizer only problem is settlement of seats. Now we come over to this particular point regarding preference shareholders. I write here X Limited and I write here Y Limited. Correct? Total preference share capital of X Limited we just saw is equal to 300 lakhs. 300 lakhs. I hope I have written correctly. And 200 lakhs is the preference share capital of Y Limited. We have also seen that their face value is 100. So if I divide it by 100, I will come to know about the number of preference shares. So we may say that X Limited is having 3 lakh preference shares of 100 each and Y Limited is having 2 lakh preference shares of 100 each. Is it clear to you? Now, coming over to the payment. Question once again I will have to go through because time and again we will have to read the question to get the correct answer. Preference shareholder of the two companies are issued equivalent number of 15% preference share. So we are giving them 15% preference shares, but we are offering them preference shares at the rate of 150 even though the preference share of our company Jet Limited is 100. Correct? Even though the face value of our share is 100, but we are giving them 15% preference shares of Jet Limited at a price of 150 per share. At a price of 150 per share. And very important here it is written, preference shareholder of the two companies are issued equivalent number of 15%. So this is quite vital line. What we mean by equivalent number? See here, In order to discharge the preference shareholders of X Limited, now Z Limited will offer, Z Limited shall issue just wait, 15% preference share. So 15% preference share we will have to issue. How many shares I will have to issue to X Limited? Total number of preference share of X Limited is 3 lakh. So equivalent number of preference share means I am going to give them 3 lakh preference shares. I'm going to give them 3 lakh preference share. Then only it could be possible. I may say that equivalent number of preference share I have issued. Isn't it or not? Now, equivalent number of preference share also means 1:1. That means for each share you are giving one, for each share or for one preference share you are offering 1 share. So 3 lakh shares you are offering. But you are offering these shares at the rate of 150. So what is the worth of payment? The worth of payment will be equal to 450 lakhs. 450 lakhs. Z Limited will have to offer 15% preference share worth 450 lakhs to discharge the 300 lakhs worth of preference shares of X Limited. You got it? Similarly, Z Limited will offer 15% preference share to Y Limited, but equivalent number of preference share. Equivalent means for 2 lakh, we are going to offer 2 lakh preference share. Again, we are offering the shares at the rate of 150. So what will be the amount? The amount will be equal to 300 lakhs. So in order to discharge the preference shares of Y Limited, Z Limited will have to offer 15% preference share and they will issue 2 lakh preference shares at the rate of 150 amounting to 300 lakhs. Correct? This is the point. So first 2 points were quite tricky. I told you it's pretty long and hard question. Third one, Z Limited will issue 5 equity shares. Z Limited will issue 5 equity shares for each equity shares of X Limited. Z Limited, the issuer, the acquirer, will issue 5 equity shares for each equity share of X Limited and 4 equity shares for each share of Y Limited. And these shares are to be issued at the rate of 30 even though face value is 10. So I hope you already got the meaning of this particular line, but still I will explain it for you in a better manner. Just pay attention over here. Point number 3. Equity shareholders. X Limited, Y Limited. As far as equity shareholders of X Limited, I look into the balance sheet, try to find out first of all their worth of capital. Where is the balance sheet? Yes, here it is. 800 lakhs. Equity share capital of X Limited is 800 lakhs. 800 lakhs. And of Y Limited, it is equal to 750 lakhs. Now first I divide it by 100 to get the number of shares. So number of equity shares of X Limited now we may say is equal to 8 lakhs. And number of shares of Y Limited now we can conclude is equal to 7,50,000. 7,50,000, correct? Because one share is of 100 each. Divided by 100. Okay, so 8 lakh number of equity shares of X Limited and 7,50,000 is the number of equity shares of Y Limited. Now Z Limited will issue, Z Limited shall issue equity shares. Now the question is how many equity share we will issue and what will be their worth. Total number of shares of X Limited is 8 lakh as we just computed. And in the question it was written that Z Limited will offer 5 shares, for each share of X Limited. Z Limited will offer 5 shares for each share. Now, if I multiply it, it will be equal to 4 lakh. Sorry, it will be equal to 40 lakh. That means we will have to issue 40 lakhs worth of equity shares, and we are offering 40 lakh worth of share at the rate of rupees 30. At the rate of 30. So the amount will be equal to 1,200 lakhs. 1,200 lakhs. You got it or not? It is written here. Here is the sheet. Z Limited will issue 5 equity share for each share of X Limited. And similarly, they will offer 4 equity share for each equity share of Y Limited, and the shares will be issued at the rate of 30 each, even though they are having a face value of 10 each. Correct? So, similarly, we can compute the payment for the equity shareholders of Y Limited. 7,50,000 is their total share. For each share, this time we are offering 4 shares. As far as Y Limited is concerned, we are giving only 4 shares against 1 share. So if I compute, that will be equal to 30 lakhs. So 30 lakh shares will have to be offered by us, and we are offering our share at a price of rupees 30. So that comes down to 900 lakhs. 900 lakhs. 900 lakhs. Is it clear to you? So most of the critical things regarding this particular question you have already done. Correct? So these are the critical points of this particular question. So now we are in a position to compute the purchase consideration. We have done the analytical work. Now this is sheet number 3. And our working note number 4. Purchase consideration. So now we are in a position to compute the amount of purchase consideration. In order to compute the purchase consideration, now what I will do? Correct? See here. First of all, we will compute the purchase consideration with respect to X Limited. With respect to X Limited. We have seen that as far as X Limited is concerned, payment is being given to equity shareholders of X Limited and of course to their preference shareholders also. Besides, payment is also given to debenture holders of X Limited. As far as X Limited is concerned, payment is given to the equity shareholders, to preference shareholder and debenture holder. However, if you remember the rules of net payment method, we have already seen, and we have seen at great length, that if any payment would be received by a party other than the shareholders, then that particular party will not be considered as far as computation of purchase consideration is concerned. So whatever payment is received by debenture holder will not be taken into account for computing the purchase consideration. So equity shareholder and preference shareholder are receiving the payment. Now I will write here amount. Actually figures are quite high, so amount will be rupees in lakhs. Rupees in lakhs. Correct? Now, how much equity shareholder will receive as far as X Limited is concerned? We just computed. Here it is. Equity shareholders of X Limited are receiving a payment of 1,200 lakhs. Correct? So I will write here 1,200. 1,200 lakhs. Figures are in lakhs. And payment is being given by way of equity shares. So form of payment is equity shares. Is it clear to you? As far as preference shareholders of X Limited are concerned, now preference shareholders of X Limited are given 450 lakh worth of preference share, 15% preference shares. Correct? This we computed earlier. So 450 lakh I will write here. And this payment is being given by issuing 15% debenture. 15% preference share, sorry. So as far as purchase consideration of X Limited is concerned, that will be equal to 1650 lakhs. 1650 lakhs. Similarly, now we can compute the purchase consideration with respect to Y Limited. Y Limited. You write here 1, equity shareholders, and then you write preference shareholder. Of course, debenture holders of Y Limited are also receiving payment, but I need not require to tell you why we are not going to take them here. As far as equity shareholders of Y Limited are concerned, they were given 900 lakhs worth of equity share. So 900 I will write here as far as amount is concerned. 900 lakhs. And of course, as far as form is concerned, that is by way of equity shares. As far as preference shareholders of Y Limited are concerned, we saw earlier that we are offering them 15% preference share worth rupees 300 lakhs. So I will write here 300 lakhs. This payment is by way of 15% preference shares. 15% preference share. Now I will total it up. Total will be equal to 1,200. 1,200. Is it clear to you? Total will be equal to this much. Although question hasn't asked about it, but just to give you a better picture, I will also prepare for you, although I should not, but still I will prepare for you. Step number 5. Ledger accounts. Ledger accounts in the books of X Limited. In the books of X Limited. X Limited is acquired, don't forget about that. So how X Limited is going to prepare the accounts? Let's have a look over here. I will prepare here 1 acquirer company account. Acquirer company is Z Limited. This is your 5th step. Ledger accounts in the books of X Limited, correct? So acquirer company account I will prepare. Besides that, I will prepare preference shareholder account also, because if acquiring company has preference shares, in that case we shall have to prepare preference shareholder account. Preference shareholder account. Besides, I will have to prepare realization account, which I will prepare for you. Realization account. Actually, I do not want to unnecessarily flip through the sheets. That is why actually I am using this methodology, so that you understand better. This is realization account, correct? Realization account. As far as realization account is concerned, okay, realization account. Then I also prepare equity shareholder account. Equity shareholder account. Equity shareholder account. I haven't prepared cash account. Only reason is that I am not receiving any payment in the form of cash. So perhaps we may not need at all to prepare cash account. Now all you have to do is to look into the column of X Limited. First towards the asset side. Transfer all the assets to the debit side of realization account. For example, land and building 550. Plant and machinery 350. Then they have investments. Investment is equal to 150. Investment is equal to 150. Correct? Investment 150. Then, after investment, I write current asset in the form of stock, 350. All the assets will be posted to the debit side of realization account, whether taken over or not, 250. Bills receivable of X Limited is equal to 50. Cash at bank, only thing is that we have to just take care of cash. We have to take care of cash only. However, in this question, it is not mentioned that cash is not taken over. So we shall easily presume and safely presume that cash also has been taken over. So I will write here 150. As far as asset side is concerned, not a big issue. Move over to the liability side. Start with the liability. Transfer all the liability to the credit side of realization account. Debentures are worth rupees 60 lakhs. Then creditors. Creditors are worth rupees 270 lakhs. Bills payable 150 lakhs. Then in the equity share capital, you write equity shareholder account, you write equity share capital. Equity share capital is 800 lakhs, so I write 800. Correct? 800. Then in the preference share capital, you write preference shareholder account, you write preference share capital 300 lakhs. Besides, you have reserve and surplus item also. Correct? As far as X Limited is concerned, I'm talking about X Limited. So whatever revenue reserves they are having, whatever reserves and surplus they are having, you are going to transfer them to the credit side of equity shareholder account 170, profit and loss account 50. I hope now it is visible to you. Correct? Very difficult to solve all this question in the class, in the proper sheet itself, but still I am trying to show it to you. So after having transferred each and every item, the next step is we will ask the acquiring company to pay the consideration. So towards the credit side of realization account, we are going to write by acquirer. You can write Z Limited also. By acquirer company. We computed the purchase consideration in respect of X Limited, which was 1650. Correct? Immediately transfer this to the debit side of acquirer company account right here to realization 1650. Now, in order to pay 1650, correct? Equity share and 15% preference shares are being issued by the acquirer. So we will write towards the credit side, equity shares in acquirer company or Z Limited is equal to 1200 and 15% preference shares in acquirer. 15% preference shares in acquirer company. That is equal to 450. Okay, the moment we are going to receive the consideration from the acquirer, obviously our acquirer company account will get closed. Now, whatever shares we received in the form of equity shares, we are going to transport them to the debit side of equity shareholders account. And I'm going to write here equity shares in acquirer company account. Acquirer company account. 1200 to the debit side of equity shareholder. Whatever 15% preference share we received, we are going to transfer them to the preference shareholder because these shares are being given to the preference shareholders. 15% preference shares in acquirer company. In acquirer company. 450. Now, if you remember, right from the beginning I have been telling and stressing upon this particular point, the moment portion of purchase consideration which is going towards preference shareholder shall be posted to the preference shareholder. Immediately you close it out, correct? So in this case, If I will close it out, there will be a balancing figure of 150. And in the last session, I talked about this particular fact. Whatever balancing figure will be there shall be posted to the realization account. Logically, in this case, there is loss to the acquiring company because instead of 300, the preference shareholder are being paid at 450. So it will be a loss. So now, towards the debit side of realization account, this loss will be posted. This loss which you have written over here, we will post it to the debit side of realization account. We will write here to preference shareholders account. That is 150. 150. Correct? Now, acquirer account is closed, preference shareholder account is closed. Now we are in a position to close realization account because we need not require to sell any asset or to pay any liability because all liabilities have been taken over, all assets have been taken over. If I will compute the loss, it will be equal to 20 lakh. You write here equity shareholder account, write in bracket balancing figure. Correct? Now this loss will be posted to the debit side of equity shareholder account. You will write here to realization 20 lakhs. 20 lakhs. Now you will have to tally this account and it is getting tallied 1,220, 1,220. This is how you are going to prepare in the books of X Limited. Question hasn't asked it. Moreover, question will never ever ask to prepare or do accounting in the books of acquiring. Correct? So just to give you an idea actually, similarly, books of this is our step number 6. Books of Y Limited. Similarly, you can prepare the accounts in the books of Y Limited. Is it clear to you? When you are going to prepare account in the books of Y Limited, you will write here acquirer, besides acquirer, you will have to prepare preference shareholder account, and then you will prepare realization account. Okay, I will prepare in the next sheet. Ultimately, I will need this sheet. So realization account, correct? And then finally, equity shareholder account. Equity shareholder account. So first we will close our asset side. So land and building is 400 lakhs. Plant and machinery 250 lakhs. Investments is equal to 50 lakhs. Stock is equal to 250 lakhs. Debtors of Y Limited 300 lakhs. Bills receivable 50 lakhs. Cash at bank 200 lakhs. Then we move over to the liability side. Equity share capital will be posted to the credit side of equity share holder account, and it is 750 if you remember. And then we will write towards the credit side of preference shareholder by preference share capital, and if you remember, their preference share capital was 200 lakhs. 200. Then all the reserves and surplus will be posted to the credit side of equity shareholder account. 150 general reserve 150. I have forgotten the amount of general reserve. Just let me check it down. General reserve, revaluation reserve 150, general reserve 150, and profit and loss account is 30. Profit and loss account is 30. Okay. So now we have posted the entire side. Now liabilities. As far as liabilities are concerned, 10% debentures were there. 10% debentures 30. Sundry creditors 120. Bills payable 70. Correct? Bills payable 70. So now we will ask the acquirer company to discharge the consideration. So acquirer company account debit to realization account. Write in bracket purchase consideration. Now, as far as purchase consideration of Y Limited is concerned, that is 1,200. Then we will take the amount to the acquirer and we will write here to realization 1,200. And we shall receive equity shares. We will write here equity shares in acquirer. If you remember, payment to equity shareholders is 900 and to 15% and to preference shareholder 15% preference shares were offered, 15% preference shares in acquirer 300. So this account will get closed. Whatever preference shares we have received will be posted to the debit side of preference shareholder account. 15% preference shares in acquirer company. That is equal to 300. And equity shares will be posted to the debit side of equity shareholder account. Equity shares in acquirer company. That is equal to equity share in acquirer company, how much? 900. Now preference shareholder account must get immediately closed, correct? So whatever balance will be there, you will have to take it to the debit side of realization account. Again, it is a loss. And towards the debit side of realization, I am going to write to preference shareholder 100. Now we will close this account also. And we will get a balancing figure of 230. It is a loss and loss will be transferred to equity shareholder account. Correct? And towards the debit side of equity shareholder account, I am going to write to realization loss 230. So 1130 and 1130, that is correct. Logically, question will never ever ask you to do the accounting in the books of inquiry. Just to actually give you a good idea of accounting, actually I thought it is better to give you some practice. Now, today I have decided to use only these sheets, correct? Because they're pretty long question, otherwise it will take a lot of time. And moreover, question you have, I think, in solved manner, so no problem at all. Now we come over to, this is our step number 7, books of acquirer. Books of acquirer. Books of acquirer. Now, as far as books of acquirer is concerned, you know what entry they are going to pass. Because this time acquirer, that is Jet Limited, is taking over 2 companies. So, you will have to exercise caution that this time you will have to pass entries with respect to taking over of X Limited. So first you pass entries in respect of what we call X Limited. Whatever assets and liability you have taken over, now you will have to mention out here once again. For example, and lots of patience is required to solve the question. Land and building 550. Plant and machinery of X Limited was 350. Because I have done the question so many times, figures are memorized to me. Investment Investment is 150 of X Limited. All figures are in lakhs. Stock is 350. Debtors 250. Correct? Debtors 250. And then we had bills receivable 50. Cash at bank, I'm simply writing cash, 300. Then we took over their liabilities, 10% debentures. Now here I would like you to let me know what figure should I write. Actually 10% debentures in the balance sheet of X Limited is given at 60 lakhs. But I have told you now many times, whenever we write entries in the books of the acquirer, we have to see to it at what value we are taking over them. Since debentures are being paid, and they will be given 40 lakhs worth of debenture as we computed earlier. That means 60 lakh worth of debentures are being taken over at 40 lakh. Now later on I will pass another entry to pay them off 10% debenture 40 lakh to 15% debenture, because we are offering them 15% debenture as we did the computation in the very first step. So again you will have to exercise caution here. Two creditors. As far as creditors are concerned, creditors 270. Then you write here two bills payable. Bills payable 150. Correct? Then you write two consideration. Two consideration. The consideration which acquirer company will pay to X Limited is 1650. Now you will have to, of course, find out the difference, and when you will find the difference, you will find differences appearing towards this side. This balancing figure will be treated as goodwill, 110. Balancing figure will be equal to 110. Don't worry about that. I have already told you, I have solved it so many times, so figures are memorized to me. However, still you must compute by yourself also. Second, now we will discharge the consideration. Entry will be consideration account debit. We have to pay 1650. I will write here 1650. In order to discharge the consideration, you have to be careful. Equity share capital. If you remember, how many equity shares we are offering to the equity shareholders? Correct? So, you will have to again go through all those working which we did earlier. Anyway, I will let you know. Actually, 40 lakhs, we computed 40 lakhs worth of shares which we are offering to the equity shareholders of X Limited, if you remember. Correct? We are offering them 40 lakh. Each shareholder of X Limited was given 5 shares. We computed the number of shares came to 40 lakh, and then we multiplied it by 30. Correct? So 40 lakh shares of rupees 10 each are being issued. So here I will write 400 lakhs, and then I will write here security premium, because these 40 lakh shares were issued at the rate of 30. So that means premium will be 20. So premium will be equal to 800 lakhs. Correct? And then we discharge the preference shareholder. In order to discharge the preference shareholders of X Limited, we offered them 15% preference share. If you remember, number of preference shares of X Limited was 3 lakh. Correct? And we gave them equivalent number of share. And face value of our share was 100. So I will write here 3 lakh into 100. Ultimately in lakhs it will be equal to 300 lakhs, 15% preference shares. However, we issued the shares at the rate of 150. So I will write here security premium once again. So 3 lakh preference shares were issued at a premium of 50. So 150. Is it clear to you or not? If it seems there is some problem, so I will show you the sheets once again where we did the computations. Here it is. To X Limited, correct, as far as preference shareholders are concerned, we gave them 3 lakh share at the rate of 150. So that is why I have written 3 lakh into 100 and 3 lakh into 50. Similarly, to equity shares, we gave 40 lakh shares and at the rate of 30. That is why I have written 40 lakh into 10 and 40 lakh into 20. Is it clear to you? So should not be a problem for you. So now one more entry to pay 10% debentures, because it was written in the question that 10% debentures were paid out by offering them 15% debentures. So 10% debentures, account debit. After taking over the debentures, now you will pay them off, and in order to pay them, you are offering 15% debentures. So discharge of debentures of X Limited. This is how you are going to pass entries in the books of the acquirer, correct? So, in the books of acquirer, this was step A. Now step B. Step B. Now you will have to pass entries with respect to taking over of Y Limited. So entries with respect to taking over of Y Limited. First entry, again you will have to take the pain of writing all the assets. Land and building of Y Limited is 400. Plant and machinery, account debit, 250. Investment, account debit, 50. Stock, account debit, 250. Then there were debtors, account debit, 300. Bills receivable, 50. And cash was also there, cash at bank, that is equal to 200. Then you took over their liabilities. 10% debenture, again you will have to exercise caution. Actually their 10% debentures are worth rupees 30 lakhs, but you are offering 15% debenture worth 20 lakh to them, correct? So here you are going to write 20 lakh because ultimately it means you are taking over the debenture liability of 30 lakhs at actually 20 lakhs. Then you write here two sundry creditors, 120. Then you write here what was another liability, bills payable. Bills payable was 70, I think so. Now consideration. Consideration in respect of Y Limited was 1,200. Now you will have to do the computation to find out the balancing figure. Balancing figure this time is coming over here, gain on bargain purchase. Gain on bargain purchase. Gain on bargain purchase, that is equal to 90. Then you will discharge the consideration. Consideration account debit, 1,200. To equity share capital account, you are offering 30 lakh shares of 30 each, but here you are going to write 10 into 10. That will be equal to 300. Then you write here 2 security premium. 30 lakh equity shares were issued at the rate of 30, that means 20 rupees premium, 600. Then you made the payment to preference shareholder, 15% preference shares. Total number of preference shares of Y Limited were 2 lakh and you issued equivalent number of preference share 2 lakh. And here you will write 100 because face value of your preference share was 100. So you will write here 200 lakhs. Since you issued your 15% preference share at a price of 150, again there will be security premium, 2 lakhs into 50. That will be equal to 100 lakhs. Then after taking over the debenture, you will have to pay them off also. So your entry will be 10% debenture account debit, 10% debenture account debit 20 to 15% debenture account. That is 20. Correct? You must be wondering how many sheets I have already filled up. After step number, what was the step? I have forgotten 8. Now finally I move over to the final step. The final step is with respect to balance sheet. Honestly speaking, in this question you were supposed to prepare only balance sheet. Correct? But still I just gave you a wider coverage. Assets. Now preparation of balance sheet should not be a matter of concern. Non-current asset, property, plant and equipment, land and building. Now look carefully. Land and building of all three company will now be added back. That's all. 600 plus 550 of X Limited plus 400 of Y Limited. Now you will total them up to get 1550. That's all. Similarly, plant and machinery of Z Limited, the acquirer 400, 350 of X Limited, 250 of Y Limited. Total will be 1000. Then financial assets, a term nowadays we use with respect to investments. Generally under financial asset we write investments. In this question there is investments of X Limited 150 and of Y Limited 50. So total will be 200. Then goodwill. If you remember, when we took over the business of X Limited, there was goodwill to the extent of 110. Correct? But when we took over the business of Y Limited, there was gain on bargain purchase. So it is always better to set off goodwill and gain on bargain purchase with each other because the amount of goodwill is higher. So gain on bargain purchase, I am setting it off against goodwill. So net goodwill I will write over here now 20. Then you write here current assets. Under the current asset we have stock of all three companies 500, 350, 250. 1100. After stock you have debtors 300, 250, 300, 850. Regarding bills receivable, Z Limited is not having any bills receivable. X Limited 50, Y Limited 50. Cash 200 Z Limited, 300 X Limited, 200 Y Limited. Total will be 700. Then you will total it up also, of course, to get your balance sheet total 5520. It will be equal to. Then equity and liability. As far as equity and liability is concerned, one, equity. Under equity, you will write share capital first of all. Equity share capital of X Limited is 1000. Correct? But don't add equity share capital of X Limited and Y Limited, because that equity share capital is already closed when they prepare their account in their books. Moreover, we can take over only assets and liability. We cannot take over their what we call capital and reserves. So equity share capital of only X Limited will be written over here. However, X Limited has discharged consideration by way of issue of equity shares and preference share. So we issued 400 lakhs worth of equity share capital to X Limited, and we also offered 300 lakhs worth of equity share capital to Y Limited. So total equity share capital will be equal to 1,700. Now, besides 15% preference share capital, in the original balance sheet, X Limited is not having any 15% preference share capital. However, in order to discharge the what we call consideration, we issued 300 lakhs worth of preference share capital and 200 lakhs worth of preference share capital. So total will be equal to 500. Now I will write here other equity. As far as other equity is concerned, other equity. Now other equity, if you will look into the balance sheet, there is general reserve of 600 of X Limited. As far as X Limited is concerned, there is no revaluation reserve. There is no profit and loss account, correct, of Z Limited, the acquirer. And don't include the reserve and surplus of other companies, because reserve and surplus of other companies are already closed when you prepare the accounts in their books, because you transferred those reserves to the equity shareholders. However, when you made the payment for consideration, security premium on equity share will be equal to 1,400. Correct? Similarly, security premium on preference share capital will be equal to 250. Actually, when you pass the entries for consideration, correct? See here, this is the for Y Limited. Security premium 100 here it is 100, and here it is 150. So total premium I have written. Similarly, security premium 800 and 600, 1,400. So you can combine and write it over here itself. So now your other equity will be equal to 790. 790. And after this, you write second, liabilities. Under the liability, you write non-current liability. 15% debentures which you have issued. You have issued 40 lakh worth of debentures to X Limited and 20 lakh worth of debentures to Y Limited. So total amount will be equal to 60. Now current liability. Sundry creditor of Z Limited 270, X Limited 120, 400 of Y Limited. So total will be equal to 790. Then bills payable. Z Limited is not having any bills payable. 150 plus 70. 220. Total will be equal to 5520. I told you it's a pretty strong question, long question. However, in the examination, they are not going to ask so many things concurrently. Just to give you a good, a strong, formidable idea to solve this question, I took a pretty long route, but it will definitely hold you in a very good state. So anyway, next time when we are going to meet you, we are going to talk about intercompany holdings. Correct? So till then, it's goodbye.